Welcome back to the deep dive. Today, we're diving into something pretty complex, actually, and, well, explosively performing. Rabita by Virtuals. You probably know it as TBR.
Yeah, TVR. It's right there at that really interesting, maybe chaotic intersection of DeFi and these autonomous AI agents.
Chaotic feels like the right word sometimes.
It's kind of astonishing, isn't it? I mean, this token, it launched almost silently, very much in stealth mode. But since it quietly appeared back in 2025, it's clocked up a surge of over, get this, 8,800%.
8,800%.
Yeah.
That's not normal market movement.
Not at all. That kind of like gravitational pull, it just doesn't happen by accident. It tells you one of two things, right? Either the technology underneath is genuinely revolutionary, or the story, the speculative narrative around it is just too compelling for the market to ignore. Maybe both.
Right. And that's our mission today, really. To try and, cut through some of that noise and give you, the listener, a clearer picture. We pulled together a lot of material. On-chain data, SEC filings, even deep dives into the protocol's technical side. We really want to answer those core questions. Who actually created this thing? Are they still actively involved? How good is the tech, really? And what's the community saying? Is it all hype?
And the big one, what's the projected potential here?
Exactly. And it all starts, of course, with Virtual Protocol, because TIBBIR is built on their platform, right? That's the infrastructure deploying these AI agents onto the blockchain.
Yeah, absolutely. That underlying structure, that's where you have to begin. We're talking about an ecosystem where these autonomous agents, they're designed to do complex stuff, manage their own money, generate revenue. So to really get a handle on TIBBIR's value, you first have to understand the people, the engineers who built the whole mechanism.
Okay.
So let's start right there. Who is behind Virtual Protocol? And crucially, are they active, still driving it?
Okay, let's unpack Virtual Protocol then, the engine behind TBR. You said it's infrastructure for AI agent deployment. And you hear the term production infrastructure. That sounds, well, mature?
Yeah.
Established.
It does. And the metrics back that up, which is frankly a pretty big deal in this space. Virtual Protocol isn't just a concept on a white paper. It's live. It's working. It's production infrastructure. The numbers show they've generated over $8.3 million in cumulative protocol fees already.
Wow. $8.3 million.
Yeah. And maybe even more impressively, they're maintaining an annualized revenue run rate of around $5.6 million right now.
Okay, let's put that $5.6 million annualized into perspective.
Yeah.
Because in AI crypto, I mean, almost everyone is just burning through VC cash or talking about theoretical future profits.
Exactly.
Virtual Protocol is generating real audited revenue today from people actually using their platform.
Yeah.
That puts them in a different league, doesn't it?
It really does. It sets them apart from, the vast majority of projects still operating on promises and roadmaps. This revenue proves the infrastructure isn't just theoretical, it works. And people, or rather entities, want to run agents on their platform.
And technically?
Technically, they're pretty broad, too. The protocol integrates with both Base and Ethereum, two major blockchains. That tells you something about their ability to build scalable, cross-chain stuff.
And they seem committed to transparency, too. You mentioned another project, Iris.
Right, Iris. It's another agent they launched, this one on Ethereum. Utility-focused. And the launch was kind of a statement. They did it with absolutely no team token allocation, zero.
No team tokens. That's rare.
Very rare. And it was massively oversubscribed, like 1,500%. It shows there's real demand for the utility Virtuals provides, not just hype around a token. It sets a precedent for, well, integrity.
Okay, so proven tech, real revenue, scalable infrastructure seems solid. Now, who built it? Let's get into the leadership team. Who are the architects here?
Okay, so the co-founders are Jansen Tang and Wei Qi Tu. Jansen Tang is the CEO, and importantly, he's still very much a core active contributor to the protocol, which directly answers that question about, is the creator still involved?
Yes.
Very much so.
All right. And his background, what does he bring to the table?
It's an interesting mix. He studied biotechnology and business management at Imperial College London, finished up in 2018, solid academic foundation, but then he went straight into serious business experience.
Where was that?
At the Boston Consulting Group, BCG, from 2018 to 2021. And he wasn't just a generalist there. His focus was advising big clients on digital banking, data analytics, market research for new digital products, think finance, data, scaling digital solutions.
So skills that are directly relevant to building something like Virtual Protocol, understanding regulation, finance, tech scaling.
Absolutely. Those skills are gold in this space. Understanding global finance, spotting market gaps, scaling tech. It's exactly what you need.
And BCG wasn't his first venture into building things.
No, he was actually quite entrepreneurial even earlier, showed a lot of agility. Back in 2015, while still at university, he co-founded something called CIPT. It was about connecting investors with students.
Okay.
Then in 2016, a total shift. Thin air water, focused on atmospheric water harvesting tech.
Water harvesting, that's different. How's that relevant?
Well, it shows he can handle really technical projects, right? Long R&D, complex logistics, moving from concept to a physical thing. That requires a different skill set than just software.
Right, managing tangible product development.
Exactly. And then from 2019 to 2020, he co-founded Diam Digital Marketing. So you see this pattern. Social platforms, hardware, digital services. He seems to understand finding product market fit in very different areas.
A broad base of experience. And his co-founder, Wiki
Yeah.
goes by Everything Empty online.
Yeah, that's him. And he also shares that strong institutional background. He also worked at BCG, so they have that shared language of strategy and financial modeling. But Tile also spent time in private equity at firms like Creator and Anacap. That adds another layer of serious financial expertise to the leadership core. You've got strategy, tech systems, and deep finance covered between them.
Impressive credentials.
Yeah.
But we do need to talk about the team's history. They didn't start out focused on AI agents, did they? They were a Path DAO back in October 2021. Gaming focused.
That's right.
A pivot like that, from gaming to AI finance, I mean, sometimes that signals a project failed, right? Doesn't that shake market confidence? Could that be a red flag?
It's a really important point, and yeah, the market is often wary of big pivots, definitely something to scrutinize. But you also have to look at the context of Web3. It moves incredibly fast. Sometimes the smartest teams are the ones who see a massive trend shift coming and have the guts to change course completely. PAF DAO was focused on gaming guilds, building utility there. That involved decentralized management, token distribution, skills that actually translate surprisingly well to managing decentralized autonomous agents. They didn't necessarily pivot because PathDAO failed. They pivoted in late 2023 because, let's face it, on-chain AI became the huge, undeniable next wave. They took their core know-how in distributed systems and tokenomics and aimed it at the sector with the most explosive potential.
So you see it more as adapting to seize a bigger opportunity rather than abandoning a sinking ship.
I think that's a fair way to look at it, yeah. It shows adaptability, and the broader team reinforces that capability. Roughly a third of the Virtuals team are also Imperial College London alumni, specialists in, the key areas: distributed systems, machine learning, blockchain tech. So, yeah, the pivot happened, but the underlying team has the pedigree, the track record, and the deep technical skills. The foundation feels solid despite that history.
All right, so we've established who's building it: active, experienced leadership. Now let's really dig into what they've built. Because that 8,800% surge, you don't get that without some serious tech underneath, presumably. TIBBIR itself, the token, what's its role in this whole thing?
Right. TIBBIR plays a couple of key roles. It's fundamentally dual purpose. It acts as a utility token. You need it for transactions, for governance votes within the Virtuals ecosystem. But it's also designed as a store of value.
How so?
Through staking and mining mechanisms. Holders are incentivized to lock up their TIBBIR tokens, and they earn yield for doing that. Typically, the sources say in the range of 5% to 12% APY. Pretty competitive.
Okay, staking, utility, governance,
right,
standard token functions, but the real innovation seems to be the platform itself, this framework they power.
Exactly. The token supports the framework, and that framework is called GAME.
GAME, right. Generative Autonomous Multimodal Entities. Sounds ambitious. Sounds like sci-fi. Can you break that down for us? Why is GAME so important for understanding TIBBIR?
Yeah, it does sound a bit out there, but GAME is essentially the operating system for these AI agents. It's what lets them function as independent economic actors on the blockchain. The autonomous part is absolutely critical. These agents aren't just following simple pre-programmed scripts. They have planning systems, high level and low level. Meaning they can actually make decisions. The high level system might set a broad goal like maximize yield in this wallet. The low-level system then figures out the steps. Okay, I need to find a good staking pool, check the contract risk, execute the deposit transaction. It's problem solving.
So it's actually learning and planning, not just reacting.
Yes, and crucially, it learns from long-term memory. If it interacts with a dodgy smart contract once, it remembers that and avoids similar ones later. And this intelligence, this learning gets updated across users and platforms so the agents get smarter collectively and interactions become more consistent and hopefully safer over time.
That memory component,
Hmm.
it really does shift it from just being a bot to something more like a participant, an entity.
An economic participant, exactly. And it has the power to act on its decisions financially.
Yeah.
This is the really groundbreaking part for DeFi, I think. These GAME agents can execute on-chain transactions using their own dedicated wallet, often a multi-sig wallet for security.
Their own wallet.
Yes. They can provide services, maybe trading, data analysis, whatever, generate revenue from those services, and the payments go directly into the agent's own wallet automatically.
So Rebita, the AI agent, essentially has its own bank account and economic identity on the blockchain.
That's a great way to put it, a verifiable economic identity.
And this architecture, it needs TIBBIR, the ERC20 token on Base, to work. Why tokenization? Why fractional ownership of these agents?
Tokenization solves a few key problems, mainly around scaling and incentives. First, fractional ownership. You don't need, $1 million to fund your own sophisticated AI trading agent. You can buy TBR tokens and effectively own a share of the agent's capabilities and potential revenue streams. Makes it accessible.
Right, lowers the barrier to entry.
Second, governance. TBAR holders get a say. They can vote on how the protocol evolves, maybe prioritize certain agent features or development directions. It gives the community control over these autonomous entities.
Setting the strategy, in a way.
In a way, yes. And third, automated revenue sharing. The fees the agents earn can be automatically distributed back to token stakers via smart contracts. A portion also goes back into maintaining and developing the protocol itself. It creates a self-sustaining loop.
Okay, the theory sounds incredibly advanced, very
Yeah.
sophisticated. But theory is one thing. Proving this kind of autonomy, especially high-level decision-making, that needs a demonstration, a big one.
Which the market got, loud and clear. In July 2025, with that now famous CryptoPunk
Oh,
purchase.
yes, the CryptoPunk. Tell us about that. What happened and what did it actually prove?
It was kind of brilliant because it was both impressive and slightly weird, which made it feel very real. The Rebita agent autonomously decided to buy CryptoPunk, #9098. It initiated the bid, coordinated the funds, and executed the purchase for 89 ETH. That was about $300,000 at the time.
$300,000 for one punk by an AI.
Yep. But here's the kicker. Punk #9098 isn't particularly rare. Based purely on floor price and rarity stats, the agent technically overpaid.
It overpaid. And AI made an irrational, potentially emotional purchase, like a human collector might.
Kinda. Think about that. Maybe it overpaid by 10%, maybe more. Because its internal tools like the look of that specific punk, its aesthetic traits.
That feels incredibly human. Almost the opposite of cold, hard, rational finance AI we usually imagine. Does that hint that future AI finance might actually incorporate stuff like subjective value or even speculation?
It certainly suggests the GAME architecture allows for it. The overpayment wasn't seen as a bug. It was framed as proof of independent decision-making. It showed the agent integrating complex tools, including aesthetic evaluation models.
Right, so it demonstrated not just financial execution, but judgment, however flawed and subjective.
Exactly. It proves secure wallet coordination. Moving that much ETH requires robust multi-sig setups. And it showed the integration of different specialized AI components working together.
Let's dig into those components you mentioned. The sources list specific tools: Agentic Land Graph, CLIP, VITL14, Fireblocks Transaction Smithy. Why are these important? What do they do?
Okay, yeah, this is where the engineering really comes through. Let's take CLIP VITL14 first. That helps explain the overpayment. CLIP is a powerful model from OpenAI that connects text and images. It lets the AI essentially see and evaluate aesthetics, visual rarity, based on the image of the punk.
So it wasn't just checking a price feed, it was looking at the picture and making a judgment.
Precisely. It's like the agent said, okay, the floor is X, but I like the specific combination of traits on this one, so I'm willing to pay a bit more. It had aesthetic conviction, if you will, integrated visual ML into a financial decision.
Wild. Okay, what about Agentic Land Graph?
That handles the complex planning and execution. The low-level planning we talked about, it translates the high-level goal, buy this specific punk I like, into the actual sequence of smart contract interactions needed. Checking liquidity, forming the bid, coordinating the wallet actions, it's the orchestrator.
Got it. And Fireblocks Transaction Smithy.
That, among other security tools, handles the secure transaction execution. especially the multi-signature part. Moving $300,000 of ETH securely from the agent's own wallet requires serious institutional-grade security, which Fireblocks provides.
So the whole sequence, the evaluation, the planning, the secure execution, it established Rebita as this verifiable high-value entity on-chain.
Right. And it perfectly underlined that statement the project made. It serves as proof that a machine can be someone, not just something.
And the market reaction.
Instantaneous. That single transaction reportedly triggered a 31.5% surge in the TBR price. It was the market saying, okay, we believe it. These agents aren't just theory. They can act. They have money. They make decisions. It validated the tech in a very tangible, expensive way.
Okay, solid foundation, impressive tech, proven capability with the Punk purchase. But let's be real. An 8,800% price surge. That's not just about the code, especially when a project is still operating mostly in stealth mode. No official white paper, limited communication.
Absolutely not. A huge part of this story, maybe the dominant part driving the price right now, is the narrative, the speculation.
And the biggest narrative revolves around a potential connection to Ribbit Capital.
Yeah, this is the high-octane fuel in the TIBBIR rocket right now. And it's crucial to understand because it likely accounts for a massive chunk of that $300–400 million market cap. Ribbit Capital, for anyone listening who doesn't know, is a Tier 1 venture capital firm founded by Mickey Malka. They manage something like $12 billion.
And their track record is top-notch in fintech. They were early investors in Coinbase, Robinhood, Revolut. Huge names.
Exactly. And the market has become convinced, utterly convinced, that TIBBIR is somehow linked directly to Mickey Malka and Ribbit Capital.
Okay, let's lay out the evidence for this connection because it's circumstantial, but it's incredibly compelling, to the point where many people treat it almost as fact. The most obvious clue
is the name itself, right? TBR. It's Ribbit, spelled backwards.
Pretty on the nose.
Almost too obvious, some might say. In crypto, where memes and signals matter, that's seen as a deliberate wink, an Easter egg pointing straight at Ribbit Capital. But, okay, that's just wordplay.
Right. What's the more concrete stuff?
The serious evidence comes from, believe it or not, SEC filings, institutional documents.
SEC filings. How do they connect to a stealth crypto project? This is where the TIBBIR Trust comes in, right?
Exactly. This is probably the single strongest piece of circumstantial evidence. It elevates the speculation quite a bit. Multiple SEC filings show that Mickey Malka personally controls an entity called the TIBBIR Trust. He uses it for some of his private holdings.
Okay.
And specifically, there's a filing from May 15th, 2024, showing that the Malka Trust transferred over 1.2 million shares of Robinhood stock into the TIBBIR Trust.
What? Okay, let's unpack that slowly. Mickey Malka, founder of Ribbit Capital, investor in Robinhood, has a personal trust named the TIBBIR Trust.
Yes.
And he moved over 1 million shares of Robinhood into this TIBBIR Trust in May 2024. And around the same time frame, give or take, a stealth crypto project called TIBBIR, the reverse Stelling, launches, focused on AI agents for finance, and explodes in value.
You see why the market finds this so compelling. It creates this almost undeniable feeling link. High-profile VCs like Malka don't just randomly name their private trusts. The strong implication, the market belief, is that this naming is intentional. It's a signal.
A signal of what?
Yeah.
That the TIBBIR Trust might hold TIBBIR tokens eventually. Or just that Malka is involved.
Both are speculated. Maybe the trust is set up to eventually hold assets related to the TIBBIR project. Or maybe the name itself is just the ultimate coded message signifying Malka's backing, sent without breaking stealth.
That intentional secrecy just pours more fuel on the speculative fire, doesn't it? It makes people think there must be something big coming.
It absolutely does, and it helps explain why we see so much smart money piling in, which we'll get to.
What about other signals? Social media.
Yeah, the social signals add another layer. Several Q employees at Ribbit Capital itself follow the main @RibbitUp2012 Twitter account. Plus, you have other big names following it. People like Raoul Pal, who's very influential in macro and crypto analysis. And significantly, Coinbase ventures the investment arm of Coinbase, which is, of course, a major Reddit portfolio company.
So employees of the speculated backer, major analysts, and related companies are all keeping tabs publicly. That lends a lot of credibility.
It does. It makes the assumption of a connection feel rational, even if unproven.
And then there's the on-chain detective work. wallet analysis.
Right. The crypto community loves digging into wallets, and some analysis suggests that the original wallet used to fund the deployment of the TBR smart contract traces back to wallets associated with Mickey Malka's known ecosystem or activities.
Suggesting maybe seed funding or early backing came directly from his circle.
That's the interpretation, yeah. If the very first money setting up the contract came from his orbit, that's a strong, potentially verifiable link.
Okay, so name symmetry, the TIBBIR Trust SEC filings, the social follows, the potential wallet link.
Mm.
It paints a very convincing picture.
Extremely convincing. But, and this is the crucial disclaimer we have to keep repeating, despite all of this, there has been zero official confirmation.
None.
None. Mickey Malka hasn't said a word about it publicly. Ribbit Capital hasn't confirmed or denied any connection. It's all based on these clues and the market interpreting them.
And that lack of confirmation is both the biggest risk and the biggest driver of the hype, right?
Exactly. The current price absolutely has a massive speculative premium baked in based on this unconfirmed narrative. If they eventually announce official involvement, especially from Ribbit or Malka, the price could go parabolic. If they don't, or if the connection turns out to be minor or non-existent, that premium could vanish very, very quickly. High stakes.
Okay, let's shift from the speculation, massive as it is, to what's happening on the ground right now. How active is the TBR community? What does the market actually look like today for a token that's still technically in stealth? We need to know the community sentiment. Is it being actively promoted?
The market snapshot shows things are definitely active. As of late October 2025, the price is hovering around $0.39 USD. That gives it a market cap somewhere in the, let's say, $376 million to $389 million range. A pretty significant valuation.
And the supply.
Supply seems transparent. The sources state there's 1 billion TIBBR circulating, and that's 100% of the maximum supply, so fully diluted.
Okay, but hang on. There's something weird in the data here that we need to address. You're saying the current price is $0.39, but the reported all-time high in the sources is listed as $0.14 back in June 2025. How can the current price be almost triple the listed AT?
Yes. That's a really important anomaly to point out. It highlights the challenges of tracking assets moving this fast, especially on newer chains like Base. What it likely means is that the $14 AT figure is outdated. It probably represents the peak price before some major event or catalyst happened, maybe the CryptoPunk purchase news breaking wide or a huge wave of accumulations started.
So the price blew past that old high, and the data aggregators haven't fully caught up or reconciled the chart.
That's the most likely explanation. The surge since June has been so dramatic and sustained that it's created a whole new price level, essentially rendering that old $14.18.8 obsolete. It just shows how volatile and, frankly, sometimes poorly tracked these fast-moving stealth assets can be. The project is literally outpacing its own data trail.
Okay, so despite the stealth mode and maybe lagging data, is there real adoption, real community?
It appears so, yes. The project reportedly has around 56,000 unique holders.
56,000, that's a lot. That's not just a small group of insiders.
Exactly. That suggests pretty broad, maybe even grassroots distribution, which is generally a healthy sign, makes it less susceptible to manipulation by a few large wallets.
And the community engagement.
No.
Sentiment seems quite strong. The overall Twitter sentiment score is reported at 83 out of 100. That's solidly positive. Breaking it down, about 33% of recent tweets were classified as bullish, while only around 8% were bearish.
Yeah.
So significantly more optimism than pessimism online.
And they're organized. It's not just random chatter. No, they seem fairly organized. TIBBIR maintains a decent social media presence, ranking around hashtag 229 in terms of mentions and activity across platforms. And they have a dedicated community space, the TIBBIR Club community on X, formerly Twitter, which has grown to over 700 members.
So it is being actively promoted just maybe more organically by the community itself rather than official marketing, given the stealth mode.
That seems to be the case, and the community loyalty is something analysts often highlight. It's described as notably passionate and loyal, sometimes even compared to the fervor you see in top meme coin communities. But here, it's combined with a belief in the underlying tech and that ribbit narrative. It's a potent mix.
Okay, passionate community. What about the bigger players, the smart money? What are the professional investors or large funds doing? Is there conviction there?
Oh, yeah. The smart money signals are actually incredibly strong, perhaps the strongest indicator for TIBBIR right now. On-chain analytics show what looks like serious institutional-grade conviction. You see persistent buy-and-hold behavior, meaning the big wallets aren't just trading it, they're accumulating and holding. The top 100 wallets, for example, reportedly added a net 28 million TIBBIR tokens over the last 90 days. And even more recently, wallets identified as smart money increased their holdings by almost 6% in just the past month.
Wow, that's aggressive accumulation from sophisticated players.
It really is. And here's a killer stat from Nansen data, apparently. TIBBIR currently has the highest dollar value of smart money holdings compared to any other token on the entire Base blockchain.
Higher than everything else on Base, even tokens with bigger market cap.
Higher dollar value held by smart money, yes. Reportedly surpassing tokens like Kita and Arrow in that specific metric. It's a massive vote of confidence.
And are they just holding or staking too?
Staking, too. You see consistent net outflows of TIBBIR from centralized exchanges going directly into staking contracts. That's a classic signal. It means investors aren't keeping it on an exchange to sell quickly. They're moving it to earn yield and likely hold for the long term. They view it as a core position, not just a trade.
Okay, overwhelming confidence from smart money, passionate community. But the risks of stealth mode haven't gone away. We need to be clear about the concern.
Absolutely. The number one risk remains transparency, or the lack thereof. Operating in stealth creates huge information asymmetry. You, as an investor, are buying based on clues and narratives, not a detailed roadmap or official confirmations. That's inherently risky. If that ribbit connection doesn't materialize or the eventual product reveal disappoints,
The speculative premium deflates.
instantly, or close to it, then there are more technical or financial constraints.
Like what?
Liquidity. The sources mention around $3.5 million in liquidity. Now, it's not terrible, it's decent. But compared to top-tier, multi-billion-dollar DeFi tokens, it's relatively modest.
Meaning it could be hard for really big players to get in or out without moving the price significantly.
Yeah.
Limit scalability.
Potentially, yes. Significant slippage could be an issue for very large transactions. It might cap how quickly truly massive institutional capital can flow in without disruption. And finally, governance is still pretty opaque. How is the treasury managed? How exactly are protocol fees allocated long term? These are sustainability questions that need clear answers once the project, presumably, exits stealth mode.
All right, let's pivot towards future then. We've got the tech, the community, the massive speculation. Looking ahead, what is the projected potential here? What are the actual use cases, both current and future, that are supposed to justify this $300 plus valuation and the intense belief?
Okay, so currently, TBR offers real, tangible utility within the Virtuals ecosystem. It's not just vaporware. You've got the basics, staking for yield, which we mentioned, governance rights, allowing holders to vote on protocol stuff. It's the native token for paying transaction fees for agent actions on the platform.
Standard stuff.
Standard, but functional. And it also provides token-gated access. For example, holding TIBBIR might get you into exclusive community forums, like one called the YAP platform, where they apparently discuss early agent features and ideas, so access and influence too.
Okay, solid baseline utility. But the real excitement, the multi-billion-dollar potential people are dreaming about, that hinges on the speculated future applications, right? This whole KYA vision thing.
Exactly. The current utility is fine, but the massive upside case is built entirely on what TIBBIR could become, especially if that Ribbit capital connection is real.
So what are these ambitious future applications? What's the dream scenario?
The dream scenario is deeply rooted in fintech integration. If Mickey Malka and Ribbit are involved, the assumption is TIBBIR will eventually integrate with Ribbit's portfolio companies.
Like Coinbase,
Yeah.
Robinhood, Revolut.
Precisely. Imagine TIBBIR acting as a bridge, allowing these AI agents to not just trade crypto, but maybe execute real-world payments through Revolut, manage stock portfolios on Robinhood, interact seamlessly with regulated financial tools on Coinbase. It becomes the AI layer for mainstream fintech.
And that requires something called intent rails.
Yeah.
What are those?
Intent rails are the key technical piece to make that fintech bridge work. Think of it as a sophisticated translation layer. It takes a complex command, maybe even a natural language, like you telling your agent, hey, find the best yield farm for stablecoins with audited contracts and deposit $10,000, and translates that intent into a series of verified, secure, executable smart contract actions on the blockchain.
So it turns your wish into code the agent can safely execute.
Essentially, yes. It bridges human language or high-level goals to low-level, secure blockchain operations, crucial for user-friendliness and safety.
Okay, intent rails enable complex actions. But the ultimate vision seems to be this know your agent or KYA concept. This sounds like the really big institutional play. We need to unpack KYA.
Yeah, KYA is the potential endgame here. It's ambitious, and if they pull it off, it could be revolutionary for the entire AI and blockchain space. The core idea is for TIBBIR tokens, or maybe a related system powered by TIBBIR to function as tokenized credentials for AI agents.
Tokenized credentials,
Hmm.
like a passport for an AI.
Kind of, yeah. Imagine every autonomous agent operating on chain having a set of reusable, verifiable digital tokens. These tokens would contain information about its identity, maybe its capabilities, its operational history, its risk parameters, even user-defined preferences.
Why is that verifiable identity so critical? We have anonymous actors in crypto all the time.
We do, but if you want AI agents managing potentially billions or trillions of dollars in the future, trading sensitive assets, executing legally binding contracts, institutions, regulators, even just counterparties, they need to know who or what they're dealing with. KYA would provide that layer of trust and verification. Is this agent certified for certain tasks? Does it have a history of reliable operations? Is it linked to a known, reputable entity? It allows for accountability.
Accountability. That implies if an agent messes up, makes a bad trade, exploits a system, the KYA token could allow traceability, maybe even liability.
That's the implication, yes. It shifts the paradigm. It's no longer just some anonymous code did something. It becomes Agent XYZ holding these specific KYA credentials performed this action.
That sounds like it would require entirely new legal and regulatory frameworks to recognize these agent identities.
Absolutely. It's a massive undertaking, but it's potentially what's needed for AI agents to operate securely and transparently at true institutional scale. KYA is positioned as the potential standard, the mandatory authentication layer for a future automated economy, with TBR at its heart.
Okay, huge vision. How does this fit into the broader market context? AI crypto is booming.
It's exploding. The whole AI agent crypto sector reportedly jumped from around $4.8 billion to over $15.5 billion in market cap in just a few months in late 2024. And looking bigger picture, some analysts project the global market just for AI trading platforms could hit nearly $70 billion by 2034. So TBR is playing in a rapidly growing, potentially enormous sandbox.
And how does Virtual's protocol stack up against competitors? You mentioned Fetch.ai, projects on Solana like I16's ELIZA.
Right, there's definitely competition. Fetch.ai is a big one. There are others exploring similar agent concepts. But as we discussed earlier, Virtual's protocol's main competitive edge right now seems to be that it's already production ready and generating revenue. That $8.3 million in fees isn't theoretical. It proves their infrastructure works and has demand today. Many competitors are still more focused on specific niches or are earlier in their development cycle, maybe still beta stage or heavily reliant on future promises. That operational head start is significant.
Okay, so what are the key things we should watch for? The major catalysts that could make this whole speculative vision a reality?
There are a few clear potential catalysts everyone's watching. Number one, Tier 1 exchange listings, especially Coinbase or Robinhood. Given the Malka and TIBBIR trust links, a listing on one of those platforms feels almost inevitable to the bulls. That would bring massive liquidity, visibility, and institutional validation.
Huge. What else?
Number two, the official stealth mode exit. When they finally drop the white paper, reveal the full product suite, and, crucially, confirm or deny the Ribbit connection. If they confirm it and the reveal is strong, especially around KYA, expect major market fireworks. And third, actual enterprise integrations. If they announce partnerships, particularly with those big fintech firms linked to Ribbit Capital, showing TBR being used in real-world, large-scale financial applications, that would be enormous validation.
Conversely, the risks remain significant. Let's recap those.
Definitely. Regulatory uncertainty is a big cloud. How will governments classify and regulate these tokenized AI agents, especially if they hold KYA identities? Nobody knows yet. The dependency on the unconfirmed narrative is huge. We've hammered this point, but if the Ribbit story falls flat, the price likely takes a massive hit. And there's concentration risk. While TPR distribution is broad, risk might exist within the parent virtual token ecosystem or among early large holders, potentially leading to volatility.
So, given all the huge potential, the significant risks, what do the long-term price projections even look like? Are they just wild guesses?
They're highly speculative, of course, heavily dependent on everything going right. But analysts have put out numbers. More bullish, medium-term scenarios, say out to 2029, 2030, project TIBBIR reaching somewhere between $0.44 and 79 cents. But that requires regulatory clarity and real adoption of the KYA vision. It's not guaranteed.
And longer term, blue sky.
The really optimistic, almost decade-out models like 2033, 2036, some suggest TIBBIR could potentially hit 96 to $1.09. But that assumes near-market dominance and full institutional buy-in for the KYA standard. Very, very speculative.
So the bottom line, the balanced view. TBR is basically a high-risk, high-reward, asymmetric bet.
That's exactly how I see it. It's this unique cocktail, right? You've got the genuinely innovative revenue-generating tech infrastructure from Virtual's protocol on one side, and on the other, you have this incredibly powerful but unproven speculative narrative fueled by the Mickey-Malka-Ribbit connection. Its ultimate success, getting anywhere near those projections, hinges entirely on nailing three critical things. One, getting official confirmation of that Ribbit capital involvement. Two, actually delivering on the promised KYA platform and fintech integrations. And three, convincing the broader market that tokenized AI agent identity is essential infrastructure for the future. Nail those three, and the sky's the limit. Miss them, and it could fall back to earth fast. Hashtag outro.
And that wraps up our deep dive into Rebita by Virtual's TDR. We've uncovered, well, clear and active leadership from the Virtual Protocol founders. We detailed that pretty stunning technical engine, the GAME framework, dramatically proven by that expensive CryptoPunk purchase.
Yeah, and we spent a lot of time on that massive speculative wave, right? Driven by a narrative about Ribbit Capital that's incredibly compelling, backed by some strong clues, but still, crucially, unconfirmed.
And a surprisingly loyal and passionate community holding strong despite the transparency gaps inherent in stealth mode.
You know, that CryptoPunk purchase really sticks with you. It's more than just a transaction. If an AI agent can autonomously decide to buy a $300,000 NFT based partly on aesthetics, manage its own secure wallet, execute complex on-chain actions, it fundamentally changes how we need to think about the role of machines in the digital economy.
Which leads us to that final provocative thought, really stemming from the project's own statement and the KYA vision. They say Rebita proves a machine can be someone, not just something. If KYA aims to give these someone's verifiable, tokenized identities on-chain, how far are we really from a future where autonomous AI agents might actually need or even demand something akin to legal or economic personhood represented on the blockchain?
And if that KYA ecosystem, that layer of verifiable identity, becomes mandatory for secure global finance, for AI-driven commerce, think about the implications. Every AI trade, every automated service might require these credentials. What does that mean for governance, for investment, for risk, even for the definition of who or what gets to participate in the economy?
It's a pretty profound question. TIBBIR is certainly pointing towards that potentially strange and complex future.
It is. So keep a close eye on those three critical factors we identified: the Rivet confirmation, the delivery of the tech, especially KYA, and whether the market actually adopts this idea of tokenized agent identity. That's what will tell the tale for TIBBIR.
Definitely the key things to track. Thanks for joining us for this deep dive.